Okay, so we'll continue here with our price action 101. This is video 3. So now we're going to get into the actual charts themselves, or we're going to get into the basic elements of the charts. So the first thing really important is you want to be using candlestick charts. I'll go over the first parts of this actually pretty quickly because ultimately candlestick charts, the way they work is just a really simple thing, and you can look it up online. It'll take a little time to get used to, but what I will say is it's incredibly important to use candlestick charts. And bar charts actually are the same exact thing. You can use those too. It has the same information in it. I'll explain exactly what the difference is, like why candlesticks are so important. But again, like you want to invest the time to learn how these work. And that's because they provide you with information that you just can't get from a simple line chart. And so, not to belabor the point, but a review, OHLC, open, high, low, close. Those are the important data points we need to know. Where did it open? What was the high? What was the low? And where did it close? Again, where did it open? What was the high? What was the low? And where did it close? This is, again, your data here, right? So your open, your high, your low, your close. The candlestick charts are just representing this data in a visual format. That's important to understand. It's literally a mental shortcut for us as human beings to be able to look at a chart and say, oh, I've got that information, versus looking at this and saying, oh, the open was 381, the high was 380. Like, and we'll see where that comes in, but there are ways. It provides a bit of a shortcut, if you will. And so this is how you read a candlestick. So first off, the candlesticks are going to vary in color. So it's going to be green or red. And there are other settings where it's like a clear color or white or black. And in that case, the clear color or white is the same as the green in this case. And the black is the same as the red. Again, there's like tons of content online about the basics of candlestick charts. So I'm not going to spend a ton of time here. But the important thing to note is that every candlestick has a body, right? And so in this case, this example, this is the body is very sort of short. So the body is this, you see how this line here, this is the wick. And this solid part, this solid rectangle is your body. So in the case of a green candle, the open is the lowest point of the body, and the close is the highest point of the body. It makes sense intuitively because if it's green, it's going up. And so it means it starts here and it closes here. So it's moving up, right? The wicks tell you what the high was and what the low was. And important, if there's a wick, it means it went to that level, but then it moved away from that level, right? Like it went all the way up here, but then it came back down and it closed here. It went all the way down here, but it came back and it like this was your well, that's different than the open. We'll get into that. It gets a little complicated. And then the red is exactly the opposite in the sense of the body, right? The open is at the top and the close is at the bottom of the body. Again, the body being this rectangular thing here, this solid rectangle. And so this makes sense, right? For when it's red, the price is moving down. So it opens at the top, it closes at the bottom. The high and the low, though, is exactly the same. Doesn't matter the color of the candle, right? Like this is the high, this is the low, this is the high, this is the low, regardless of the color of the candle. And that is actually incredibly important because it's important to know how far price traded in one direction or another, regardless of the color of the candle, right? Knowing that price went all the way down to a level is important, whether the candle is red or green. And knowing it went all the way up to a level is important to know, again, whether the candle is red or green. And so that is the basic makeup of a candle. And that's the reason why a candlestick chart is so powerful compared to a line chart. Because a line chart is only telling you the closing price, right? This price and this price. That's all it's telling you. It doesn't actually tell you what the high was or the low or the open for that matter. And so you can visually see, and again, we'll look at actual charts to see the examples. You can visually see, though, that this string of information, the open, high, low, close in one fell swoop, whereas the line chart, we'll go to a line chart really quickly, right? This line chart is just telling you the closing prices on it, right? Like that's all it's doing. Whereas it's not giving you that extra detail of how high did it go, how low did it go, and so forth, which is incredibly important for identifying those imbalances in supply and demand that we talked about in the first video, right? So going to a real life example, not going to belabor the point here. This is a green candle. So what does that mean? It means we opened here at the bottom and we closed here, right? Because price moved up. Again, it means the high was all the way up here. This is your wick. There's a tiny little wick at the bottom. That's your low. And that's an important concept, right? Wicks and candle bodies are going to be varying sizes. Sometimes you have a really long wick. Sometimes you have a really short wick like this. And sometimes you have a really long body candle. Sometimes you have a short body candle. Those are all important details. And we'll get into those. Red candle, same example, same idea, right? Close is at the bottom, or excuse me, open is at the bottom, close is at the top, right? Because it's moving down. And again, you can see the prices along here, right? So it opened at 26, it closed at around 21.89, right? But it had a high of 31, right? So at some point, it was all the way up here. And it also had a low of 17.86. So at some point, it was all the way down here, yet it managed to close up here. So that's also important to understand is that, again, remember I said the wick is important. Like some people just myopically focus on the body. I think that's a mistake because, I mean, if you just look at this body of this candle, right, so it has a range, and that's what candles are, really. They're a range. So it's a range from 26, where it opened, to 21.89. Let's just call that 22, where it closed. So it's a $4 range. But that doesn't, like, isn't it important to know that the stock traded all the way down to less than 18, right? Or all the way up to 31? Like, that's incredibly important information. And the fact that the price retreated is even more important to understand. And again, that's what candlestick charts show you that you literally cannot see in a line chart, which is what the default, that's what most people see. That's what most trading platforms sort of open up on. That's their sort of default. That's what you see on CNBC, etc. And so here is an example, kind of putting it all together, of the different candles. So you see all these green candles, right? So this opened here, closed here, opened here, closed here, opened, closed here, opened, closed here, opened, closed here. Very bullish. Bullish just means, bullish means price is going higher. Bearish means price is going lower. This is a red candle, so it opened here, closed here. You can see it has a lower wick. And this is a chart of GE going back to 1969 for reference. And this is your line chart. And so it's important, and I kind of previewed this earlier, there's detail that you just can't see in that other chart. I mean, probably most importantly, this peak here, when you look at it on the other chart, it's important to see the shape of the candle. And we'll talk about this in great detail. That's where the alpha is. That's the edge. Understanding the levels for this candle and why that makes sense, what that means in terms of supply and demand. But you cannot get that detail in that line chart. And so to continue on with just characteristics of candles. So again, bullish means price is going higher. Bearish means price is going lower. Important to understand that a lower wick is generally bullish. And that is because it means price traded all the way down to a certain level, but then it managed to close higher than that level, right? So in this case, right, price opened here, it closed here, right? But it was all the way down here. So that's incredibly bullish that it was all the way down here, but managed to close all the way up here. This is less bullish, and this is more of an indecision candle, but still long wick, managed to close up here. And these candles, notice they're red, right? Which is interesting. Like, how could a red candle be bullish? It's not incredibly bullish, but look at this. Like, it's relative, right? It's all relative. It's on a spectrum. Look at this long wick for this candle. Even though this is a red candle, the fact that it traded all the way down here and managed to close here is definitely less negative than an alternative that we'll look at when we look at the bearish example. So again, bearish meaning price going down, right? Because we went all the way down here, but we managed to come all the way back up and we closed here. Because remember, this is red. So it opened here and it closed here. But again, this wick tells us it traded all the way down to this level. But again, it managed to recover. And in this case, it, in this case, this is a little bit, this is still, fairly bullish, a little bit less bullish because we didn't have as much of a move off of the low, right? In this case, we went all the way down here and came all the way up here. In this case, we went all the way down here, but we managed to only get back to here. So relative terms, this is more bullish than this one. Other bullish candle types, this is the most bullish you can get. This is just a beautiful green candle. There's no wick anywhere. It just means price opened here, closed here. It just moved up. Doesn't mean it moved up in a straight line. And again, think about that trend video that we just did right before this one, right? Like within this candle, there are going to be lower highs, or excuse me, sorry. Within this candle, there are going to be higher lows, right? There are going to be points where price is going lower, but it holds a higher low and it's still trending in the right direction. But this is the most bullish you can get. A nice, beautiful, full green candle. Then you have something like this where you have some wick. It means, right, like there was some pullback at some point. Then you have this, the hammer candle, right, where price, again, trades down to here, but then closes all the way up here. You can see that was on the other, slide as well. And then these red candles, which were there as well. And so example, let's see, where do we find bullish candles here? Here's an example of a hammer type candle, right? You see long lower wick, but then closes all the way up here, right? This is an example, this is probably the closest example of just a clean candle with no wick. You can see there's a little bit of wick here. Those are hard to come by, especially depending on the time frame. But the idea is the less wick you have, the more bullish. I mean, these are all pretty bullish. These are all really small wicks. For example, this is a more hammer-like a little bit. And so bearish candles, again, bearish meaning price going down. It's just the opposite, right? And that's important to understand. The upper wick is bearish, meaning price went all the way up here, but it closed all the way down here, right? So it was bullish at one point, but then it just couldn't hold it. And you can see the same pattern for these other ones. Again, same exact idea as green, except now it's red. So this is just a solid red candle. Opened here and then closed here. Just a big dump. And then same idea as those, the green candles. And again, looking at the same chart, we can spot the bearish candles, right? So you got this one, big red candle. There was a lower wick, so there's a little bit of a rally at the end, but not much. We didn't talk about this one actually, but look at this, right? It's red, right? But look at the distance between the body and the low of the wick. I mean, my God, it went all the way down to, what is that? About 580, but then it managed to close above like basically $13. So it dipped all the way down to 6 and then increased 100% to get back to above 13 to close out this candle. So that's pretty bullish, even though it's green, or excuse me, even though it's red. And you can see there was actually follow through after that. And then you have your indecision candles. These are candles that are not really bullish or bearish. They're kind of annoying, actually, if you're trading within them. I mean, this is just a disgusting thing to trade inside because it basically, right, so it's green, or excuse me, it's red. So it opens here, it closes here, but in the process, it goes all the way up here, and then it goes all the way down here, right? So think about that. It goes all the way up here, and it goes all the way down here, only to end up, closing here. Like, that's just really annoying. And the same idea with this one, right? It's just, two sides of the same coin. Instead of closing down here, it's closing up here, but still really annoying. It fakes you out up here and then fakes you out down here. And you have this, the ultimate sort of indecision candle. This is called a doji, where basically nothing happened. Well, it goes high up. It goes to this high up here, goes to this low down here, but really just nothing happens. And it doesn't even have a color associated with it. And that's important because the open and the close are the same. And I think I maybe didn't mention that explicitly, but that's the difference between a green candle and a red candle specifically. The open and the close, right? For a green candle, the open is higher than the close, or excuse me, for a green candle, the open is lower than the close, meaning it moved higher. For a red candle, the close is actually lower than the open because it's moving lower. And then we have, again, the same chart. Let's see if we can spot. Here's an indecision candle, right there. That's very close to a doji. Again, it makes a high, it makes a low, but then it basically settles out at the same place. So really a big fake out. In reality, that is actually a range in a lower time frame. I don't want to confuse people. Time frames are the next thing we're going to talk about, but that's the idea, right? A doji is generally a range on a lower time frame, just a really annoying kind of chop zone that you don't want to try to trade through. And finally, let's think about candle transitions. And what I mean by that is that every candle that you're looking at, and you can choose it, it's dynamic, it's completely customizable, up to you. It has a certain time frame associated with it. So you had a candle that's a daily candle, for instance, which means it's showing you all the data of all the trades that happened in one full day of trading. And so the open is the first trade of the day and the close is the last trade of the day. And so it's important to understand, for a daily candle, right, there's a lot of trading that's happening within that candle. Like, you can look at a candle that's only 5 minutes long. So in the same way that the daily candle opens at the beginning of the day and it closes at the end of the day, a 5-minute candle is basically taking that daily candle and slicing it up into 5-minute chunks. And so you have one 5-minute period where you have an open, a high, a low, a close, and then the next 5-minute period, next 5-minute period, next 5-minute period. You can have, there are candles of basically infinite time frame. Not infinite, but every single, you can actually get down to 1 second candles. So what was the open on this 1 second? What was the high? What was the low? What was the close? And that is actually something of an advantage if you can look at multiple time frames, because understanding what's happening on the 5-minute candle can give you a sense of what's going to happen on the daily candle, for instance. And so all that preamble was to say a candle has a time period where it hasn't closed yet, and so it can transform and morph into different things, right? And I'll talk about that in the next video. I think that is probably the real difference in terms of how candles work that I want you to sort of pay attention to. All this other stuff you can find tons of content on. I don't think a lot of people talk about the actual candle transitions and what they mean. And again, I think this is one of those sections where you'll want to play back once you've absorbed more of the material, because it's going to be even more meaningful once you're finally doing live trades to really get a sense of how the market is moving, right? Like, oh, this candle looks like this now, but it may not look like this when it closes, essentially. So I'll stop here and we'll pick up the next video on candle transitions, and then we'll finally get into some actual live charts.